Good afternoon. I guess I'm the last speaker, so please don't fall asleep on me. So my name is Kyle Kim. I am with Blockwater Capital. Blockwater, as the MC just mentioned, we're a pure digital asset fund based out of Seoul, Korea, and we currently have over about 30 projects in our portfolio. We're a team of about 10 people, and our team consists of entrepreneurs, angel investors, early crypto adopters, as well as a few ex-finance professionals. And a quick background about me, because that kind of it pertains to what I want to talk about. I was a traditional finance guy. I worked at Morgan Stanley as equity research, covering the Korean chemicals and refiners for the last 9 years. So I looked at stocks for a very long time, and I think the issue of STOs coming into the blockchain market is actually very exciting and interesting. But at the same time, I think you do have to take a step back and try to understand, what are we really talking about? Because conceptually, yeah, it makes sense. But then in the infrastructure and whatnot, I think there are some layers that we do have to talk about. So I know Polymer and Liquia, they have great projects going on right now, and they're going to be probably one of the frontier guys kind of making it better. But I think there are certain areas where you kind of have to just kind of take a double look. So I guess my perspective is I'm coming from a fund. I'm coming as a guy who looked at securities. So I guess something I want to talk about is how the fund looks at the growth of STOs, and also if we could draw any parallels from previous kind of experiences that Wall Street or the securitization of assets have done to the market. So this is just a kind of general overview comparing the different asset classes and where tokens, both utility and security, stack up against traditional assets. So as you know, the whole reason why we're talking about STOs today is because of the fact that when ICOs were being raised, they didn't go through the proper authorities, and that's why and the SEC, while they haven't really given an exact guideline, they've given pretty good warning shots already several times. I think most recently they hit a fund, they hit an exchange, and they hit 2 projects which were not actually, quote unquote scams. So I think they're sending a signal to the market that, hey, if you don't do it the way that we told you to do, then we're going to come after you. And eventually, I think naturally, demand from ICOs, at least the utility tokens, is going to shift over to security tokens. So just kind of going back. So Bitcoin actually falls into the commodity, as you know. It's actually being covered by CFTC, and something I do want to talk about the security. The whole idea of security is that it has to pass the Howey test. So there's these 4 rules where you talk about is there an investment of money, and does that investment go to a common enterprise, and is there a profit expected from that money investment, and does that profit come from a third party? So if you pass all 4 of those, you're considered security. And what the slides are wrong one. But so I guess going back to the security token offerings, just the basics. I know my predecessors actually discussed this before. It's really a digital representation of ownership of a real world asset. So be it stocks, bonds, real estate, which it's something that everyone's really excited about. And what that means is it has intrinsic value. So if the value of something, let's say STO is $10, the company makes earnings of $10. Next year the earnings double. In theory, the price of that STO should be a function of the earnings growth. And that's how security stocks work. And sometimes they can pay out dividends, whatnot. But that's why, contrary to what we see in the ICO market, you might not get that 10, 20, 30 times X, but you're also not going to get that 70, 80% decline in prices. So that fluctuation the volatility will be much less going forward. So it has intrinsic value, it's quick. Normal transaction times, at least for equities, there's T+2 rules. So settlement day, cash settled, the actual ownership takes place 2 days later. But with the STOs, it could actually happen instantaneously. It's liquid. Right now, there's no representative STO exchange out in the market. However, once these STO exchanges do come out, you could actually trade these tokens, which act as real world asset. Also, it's automated by smart contracts. So I think as Polymath and Heston mentioned, they do want to put KYC and AML aspects to it. So it's actually embedded into the token. And at the same time, it could have utility. So just as how these SEC has viewed a lot of the ICOs currently to have to be a security, you could, in theory, you could have like an exchange point which operates within that exchange. You get a discount. At the same time, if the exchange says, hey, we need a 20% profit or dividends, that's essentially a security. So the bonus here is the fact that it's fully compliant with regulatory bodies such as the SEC. So what that means is it's fully registered as a security. So from an ICO or a project perspective, they could go through the full route. So you could be fully registered, and most times you would do an IPO, or you could get the exemption. So that's through the regular A plus. And you're going to probably be hearing about a lot of these projects going forward because as individual investors, you may not be able to participate in a lot of the STOs that are going to be out in the market in the next couple of years. And this is just how kind of the regulation kind of the breakdown. So a lot of the STO market, they're going to go for the Reg D, 506C regulation. So there's no limit on the offering limit, and you could kind of market to the general public. But it is limited to the accredited investors. So these are the investments that the general public can be part of. Right now, what we're hearing in the U.S. is that a lot of them are also aiming for the Reg 8 plus, particularly Tier 2. But the issue is, as you kind of move down this from left to right, it gets more expensive. So if you have the means, and if you have the credible business, I guess operations to finance 2 years of audited financial, it means that you actually didn't. So your operation should have been up for more than 2 years. You might go for the Reg 8 plus route, but at the moment, from my understanding, there hasn't been any projects that have actually passed the 8 plus route. So most are actually going through the 506C, which limits the investor base for a lot of retail investors. So when do big institutions go in? Because that's really what everyone's kind of waiting for. And if you kind of refer back to what Jay Clayton, who is the SEC chairman, said, at the moment he sees every ICO as a security, and he knows that the ICOs themselves will not declare themselves as securities because they'll do these semantic gymnastics. So they'll change the wording around and make it seem like these are at the end of the day securities. Same thing. David Wells was a former vice chairman of Nasdaq. Just about a month ago, he moved like trading trading to maybe a Binance or an LP, and then they'll start to react. And then what David Wall actually says is the current market is actually at the bottom. It's around 150 billion right now, but it's not attractive enough for the Goldman Sachs of the world to kind of come in and potentially get dragged in the mud, even with all the negative kind of issues that are taking place in the blockchain industry. So I think the key issue here is the industry has to grow organically within the community before you get the interest from a lot of the global players. So yes, you hear talks about Goldman Sachs potentially making up a trading desk. You also hear Fidelity is looking at custodianship of crypto assets, but I think those are it's gonna take some time. Having been working at a bank myself, the technology aspect, they invest a lot in it, but the upgrades are very slow. So just until 4 years ago, I was still working on Microsoft Excel 2003 in 2013, and what the banks want, they want to make sure everything is it's a tight ship before they implement any of the new technologies. So this is kind of the area where we want to kind of look at the past, look at the present, and then how do we prepare for the future. And I do want to sorry for the way the fonts came out here, but STOs, are they a hype or an opportunity? So I know there's a lot of talks about STOs being that kind of new wave, STOs being that kind of new ICO, which kind of drive prices higher. In some ways, yeah, it's great that there's hype. There's tremendous opportunity, but you have to kind of understand, securitization of assets is nothing new. So if you recall back in the 2007-2008 financial crisis, the subprime mortgage issue, that happened because Wall Street was securitizing mortgages, they were securitizing insurances, and all of a sudden the system failed. So just because you have an asset-backed security, which in theory has value. If there's no market for it because everyone's afraid, there's no market, and everything could come tumbling down. So I think what I want to emphasize is that um, if the ICO market was more about the technology, SEO market is more about the business operations, and it's more about the earnings growth. It's more about the cyclical nature of businesses. And if you can't get that kind of, and in the SEO is tying that technology and the business operations together, and if you can't be, keep that impeccable, then there's big issues, that waiting to happen. So my question is, I don't have an answer, but Wall Street can get it right back in the, 12 years ago. So can blockchain? I mean, I hope so. But I think that's something you have to consider before SEOs become this mainstream investment for every investor. So looking to the present, I think most of us are here. We've been involved with the market. So what went wrong? What isn't working for ICOs currently, and and how can we kind of make it better? So I think a lot of problems is that there were illegitimate projects, i.e. scams. And so these are projects that never intend to produce anything at all to begin with, but capital was very easy, so they took advantage of that. Communication, lack of or excessive misleading. So I think the problem that we see with the ICO markets has been that there's been a lot of communication happening, and given that the idea was that they're not regulated, a lot of misleading statements were made, a lot of things were discussed which were not true, and that's led to general market viewing the blockchain market as something less than favorable. And at the same time, there's also lack of communication from the project. So I think what's wrong with the current ICO market is the fact that there is a mismatch between investor expectations and issuer expectations. And the key issue is for the projects who don't really communicate with their community, it's because they're startups. So let them they want to do their stuff. They don't have the time to talk to the investors, and yet at the same time they're listed. So they're not. You have to consider that they're no longer kind of small time players. They have invested money, and they do have to cater to their investors. So I think this ICO market is the first time where venture funds and startups actually were able to raise funding, and then you see how the market perceives them in the market every day. So given the time constraints, I'm going to kind of go over this quickly. So the way we think about this is that, as I mentioned earlier, the current market is for us investors kind of live streaming what happens in the VC funnel process. So as you know, if you talk, I talk to my friends in VCs, they tell you for every 10 projects they invest in, 8 or 9 will fail, and that one will make up the rest of the ROE. And given that these are the startups that we funded during the ICO process, you're seeing them going through